Hey, what's up, stock compounders? Brad here. So it is that time again, another weekly Q&A. So let's dive right in, guys. Investing with Frank. Would you rather a SaaS company, 40% operating margins, 30% 5-year sales, B, industrial company, 10% operating margin, 4% 5-year sales? Frank, I got to tell you, man, I feel like I'm taking the Series 65 sometimes with your questions. Fortunately, my guy SC posed kind of a response to this, and it's quite thorough. So I'm going to let SC run with this one. Thank you, my man. Next one. Hey, Brad, do you have a buy list that you are waiting for the right price? If so, what is in it? That's a great question. It just feels like there's a lot of kind of instability in the market, a lot of volatility. It seems like things could go south anytime. So I have thought more about, kind of shoring up my wish list, my buy list. And I'm probably going to put a video out about that next week, just to really hold my feet to the coals to update that wish list. So I appreciate that, Rudra. I am going to get on that, and you will all know very soon. Can you recommend a book on options? I would be very interested in addressing the Phil Town strategy. I understand the basics, but I lack confidence. Also, if you could do a few videos about it, would be great. You're doing an amazing job. Huge follower. Awesome. Thanks, Diego. So options, you guys, I have done very few options, okay? I've bought a couple of leaps on Micron, on Fiat Chrysler, but I'm very inexperienced with options. If you guys look through the comments on the last video I made yesterday about Phil Town's options positions, there are a lot of very smart people in the comments who have taken some advanced trainings with Phil Town, and I'm sure with others as well. So definitely check out the comments. One book that came to mind that I do own, I haven't really opened it, is called The Intelligent Options Investor. Okay, so of course everyone knows the Intelligent Investor. This is the Intelligent Options Investor, and it seems like it has a pretty strong following in the value investing community. But if any of you guys have a book that you recommend on options, let us know in the comments. It'd be very valuable. And in terms of doing a video about it, I don't know enough about it at this point to create content around it. But maybe sometime in the future. Many of us get some monthly income, so there is surplus to invest every 30 days. That's a great position to be in. With index investing, things are simple. Just buy the index every month. How would you apply this to individual stocks? Great question. Make small purchases every month or wait for an event and go all in? If so, what are the criteria to add into your current holdings? To which of them would you add and why? So the way I do it is I let the money pile up in my account, making monthly contributions. And when I get a business that comes along, a public company that just knocks me over the head as an obvious buy, which doesn't happen very often, might happen 1 or 2 times a year. That's when I deploy that cash that's been piling up. So that's my approach. Sort of this wait for an event and go all in. And it doesn't even have to be an event. It can be a company that you just discovered, and you find out it's undervalued. I guess the event is that you just discovered the company and went into it, researched it, understand it, and realized, okay, this is a compelling investment. So that's how I would answer that one. Would like to hear your thoughts on the amount of cash in your portfolio in a time like this. I'm selling what I own that has reached intrinsic value and building cash. So I have a lot of cash in my portfolio. It's probably about half of my portfolio is in cash at the moment. It's not because of the time that we're in, okay? It's not because I'm looking at all of these indicators and seeing, thinking that the market is incredibly frothy and that, it's going to correct tomorrow or next week or next month. That's not why I have a high cash percentage in my portfolio. The reason I have a high cash percentage is I'm having a hard time finding things that are compelling. Okay, part of that is probably because there's a lot of froth in the markets, but it's not because I'm trying to time the market. Right, Pabrai, whenever he's asked about these macro, situations, he always says, micro trumps macro. Okay, focus on the individual businesses. Don't try to time the market, because that is fraught with, it's very difficult to do that. Very difficult. Some would say it's impossible to do that. I'd probably say it's basically impossible to time the market. Just because it feels frothy now, there's no law of gravity that says, by a certain date, this thing has to correct itself, right? It can get frothier and frothier and frothier. So for that reason, I think it's very hard to time the market. Now, Howard Marks has written a book on this. I forget what it's called. It's something about timing the market, or market cycles. Something about market cycles. He wrote it just within the last year or two. He's probably the best thinker in the realm of investing around kind of this topic of, how do you time when to be more risky in your portfolio, when to kind of swing for the fences, and when to take risk off the table. But yeah, I don't have any confidence in my ability to do that. So it's really just based on, am I finding businesses that I want to own at current prices? So that's a long answer to this. Yeah, so about half cash, and it's uncomfortable to have that much in cash. So I'm hoping I can find some more stuff soon. As a European investor, I can buy RACIS through DE. I don't know if that's an acronym or if DeGiro. I would be interested in your thoughts on the stock and Pabrai's recent buy. Many thanks. Yeah, so it seems to me like RACIS, if you guys aren't familiar, it's the real estate investment trust in Turkey. It's, they basically own a bunch of warehouses. And they have, great tenants, Amazon, a lot of these fantastic companies. It seems to me like it's basically the company that Pabrai is most bullish about, based on what he's said. Now, he has spoken to this company, so I would go through his last kind of 3 or 4 public talks at different universities and kind of take notes, write down everything he said about RACIS, and then, go into the company in ticker terminal here and look at, news, detailed financials, see if you can find write-ups on the company. You can see here the market cap as of, I guess this is probably as of Friday, is 119 million. That's awesome. Okay, so it's still a very small company. I think I heard Pabrai saying, He thinks the real estate, at fire sale prices is worth somewhere between 300 million and a billion. I think I remember him saying that. Make sure you double check that. But, so at the low end, the real estate is worth about 3 times the current market cap. Of course, there's debt involved and all of that. So, do your homework. But if I had access to this company as a U.S. investor, I can't get it through Interactive Brokers or TD Ameritrade. Certainly Robinhood, I can't get access to this. If I could get access to this company, this would be at the top of my list of companies to understand, to dive into. So that's awesome that you're in that position. And yeah, go for it. I mean, learn everything you can about this company. That's what I would say about that. In his most recent podcast, Tom described his process from going 100% cash into more and more investments by percentage. This is Investing with Tom, who I did a podcast with a couple weeks ago. I will definitely re-listen to that episode and jot down the details. My question is, did you follow a similar process of going from cash to investment based on the percent cash you have at any given time? If so, how has this system helped you? So my approach for this, say I was starting with all cash today, okay? My current approach is I'm looking basically for 20% bets, okay? I want about 5 high conviction positions in my stock portfolio. So, as I find things, I'm willing to just go 20%, right all at once. I've never really been one to tranche into a position. If I like it and it's a compelling price, I'm just piling in at 20%. That's been my approach. That's not to say that will always be my approach, but that's the approach I'm comfortable with right now. And I don't remember exactly how Tom does it, going, by percentage. I'm not exactly sure what his strategy is for that, but that's my approach. What are your thoughts on buying copper? Did you investigate buying metals? So I mentioned in a previous video, I did take a small stake in Lithium Americas Corp. So I do have some exposure. I'm kind of dipping my toes into the metals mining space. I think copper, I've heard great things about copper. When the market is, when the market tanks, when the market crashes, these copper bets, these great mining companies that are involved with mining copper, tend to do really well. So I think you can read about strategies like that in Corner of Berkshire and Fairfax. But I haven't bought any copper miners yet. But, one of the funds that I follow is Massif Capital, MASSIF. And, they're really big on buying companies that are going to help the transition from sort of a high fossil fuel economy into a low carbon economy that's much more based on renewables. And copper is a huge part of that transition from, fossil fuel economy to low carbon economy. So very interested in copper miners, but I haven't really gotten into it yet because there haven't been any that I've seen great investors own that are still kind of at a compelling discount to their perceived value. Once I see that delta between what they think something is worth and what the price is, that's when I'm going to really go in and learn everything I can about those particular companies. So it's on my radar. Which metric would you favor if you had to blind pick a stock? Low price to earnings, low price to sales, or low price to book? If I had to do it blind, it would be a low price to earnings, right? Because, in my mind, earnings are, at the end of the day, as an investor, really what's putting money in my pocket. It's the money that the business is earning, and ultimately what the cash flows are, which is a little bit more in depth than earnings. But sales, sales, you got to understand the margins, right? To convert sales into what's actually going to go into the investors' pockets. And then price to book, book, I don't know. There's just so many different ways to value things, and book values, I don't think are always a great estimate of the value of the assets that are owned by a business. So it would be low price to earnings. How much research do you do before investing in a company? Do you read at least 5 10Ks, etc.? So I don't. I probably should do more thorough reading of 10Ks over the last 5, 10, 10 years, I think is probably the gold standard. But, I call myself the shameless cloner, okay? My ideal, I think, is to start a cloner fund, right? Where, and Pabrai talked about this back in 2012, where, he basically said, all right, if you have an IQ of 50, right? If you're the village idiot, just invest in an index fund, invest in the S&P 500. If you have an IQ a little bit higher, say you have an IQ of 70, buy Berkshire Hathaway, right? You're likely to do better than the S&P 500 if you buy Berkshire Hathaway. This is, Buffett's take, or Pabrai's take in 2012. If you have an IQ of 100, right, blindly clone great investors. And there was a paper written about, Warren Buffett. I think it's called Imitation is the Sincerest Form of Flattery. I'll try to link to it in the description. But it was basically looking at if someone had blindly cloned Buffett from 1978 to 2008, over those 30 years, they would have gotten like 20% annual returns, okay? And this is just, looking at the 13F filings. When it's publicly known that Buffett bought, you buy. When it's publicly known that Buffett sold, you sell. And obviously there's an issue with this. Clearly, Buffett is the greatest investor of all time. And that was pretty well known by 2008. But it probably wasn't so well known, back in 1978. So, it's easy to identify these incredible investors in hindsight. Much harder to do it at the beginning, right? But certainly there was a lot of data about Buffett out by the late 1970s. But anyway, yeah, that's kind of my ideal, to figure out a system of shameless cloning, right? And, I can do my research in my own private portfolio because I enjoy that. But to start a fund, a shameless cloner fund, I think that would be a lot of fun, actually. But yeah, it varies how much research I do. If somebody like Li Lu or Pabrai has bought something, I'll often take an initial stake without having done much research, and then kind of learn more and then add more into my position. But there's no kind of rule of thumb around that for me. We are told to stay within a circle of competence, but we are also often told to somewhat diversify the risk with uncorrelated bets. Yeah. Should we therefore be looking to grow multiple circles of competence? How do you think about running a concentrated portfolio while making low correlation bets? Or would you not mind being highly concentrated in a similar niche? Yeah, it's a great question. So we're told a lot of things. Okay, if you take everything that we're told, uh, you can't act on any of it because there's contradictions all over the place. Diversifying risk with uncorrelated bets. So if you listen to like Warren Buffett or Charlie Munger or Monish Pabrai, I don't think you're ever going to hear about diversification and correlation between different stocks. That said, I probably wouldn't put all of my chips in something very narrow because, for any niche, for any corner of the market, some technology can come in and disrupt that. And if I have all my eggs in that basket that gets disrupted by this new technology, that's going to hurt. That's going to knock me out of the game, and I don't want that. So, but that said, I think most people put way too much emphasis on diversification and correlation. I really don't think at all about those things. So, yeah, I don't mind being highly concentrated. I think it's, Charlie Munger says, he thinks 3 stocks is enough to be diversified, right? One, there's no diversification, right? Unless you have Berkshire Hathaway or some company that's, intrinsically diversified. But yeah, I think diversification is overrated for people who are willing to do the work, for people who, have chosen this path of picking stocks. But, everybody's different. If you can't sleep at night because you have all of your money in 2 or 3 stocks, maybe that's not for you. Maybe it makes sense to have 5 or 10 or even 15. So it's really, at the end of the day, it's a personal thing. Like Pabrai, he wants to have 10 bets in the fund where he's managing money for other people, and usually only 2 or 3 in his personal portfolio. So, there's no kind of general rule of thumb for this. What is your view on Shinnikin? It has received some mixed commentary on Twitter. It certainly has. So the big red flag recently for Shinnikin was, and I haven't gotten too into it, but Jeremy Raper is a pretty prominent investor. I think he runs like a private membership group where he shares ideas. He used to own it, and he wrote some pretty bullish write-ups on it in the past. You can find that on his blog. I believe Raper Capital, if you search that. He's got a website and a blog. But from my understanding, the CEO of Shinnikin donated some stock to a charity, and by doing that, diluted the existing shareholders, which, had a lot of people up in arms about whether, the CEO was going to act in the best interest of shareholders moving forward, right? It was potentially an integrity issue. So I haven't gotten to the bottom of it yet. It's, yeah, I'm watching it. I'm watching it closely. I do plan to open a position in Shinnikin early next week through Interactive Brokers, and I'll definitely make a video about that. So, I'm still trying to figure out, how big of a red flag is it? Does it change the thesis? Does it change the investment case? So more to come on that soon. Thanks, Sam. Love the channel and quality content. My question is regarding Value Line membership. Yep. I do like to pump this kind of Value Line slash Morningstar membership that you can get through this library. So the library is in Virginia. It's Fairfax County Library. I'm going to put a link in the description. So non-residents can become a member of this library. And the great thing about that is with a library membership to Fairfax County Library, through their website, you can access Morningstar and Value Line, which I believe, if you paid for both of those each year, I think it would be more than $1,000 a year. Whereas this library membership is something like $30, okay, per year. So it's a pretty nice hack that I came across. Highly recommended, guys. I use Value Line. I don't use Morningstar as much, at least the premium version of Morningstar, but I do find a lot of value in Value Line. So I will link to that library because it can be a little tricky to figure out which one it is if you're just doing a search. Yeah, so awesome. That's it, guys. Thank you for all of the questions. This is getting more and more fun, these Q&As for me. So keep the questions coming. I'm going to do these every week. You guys, I have 2 kids. I have 2 young kids. And I keep thinking each Q&A, all right, I'm going to go through and I'm going to put the timestamps in so you guys can just click on the questions that you're interested in and find the section of this video that you want to listen to. But honestly, guys, I just don't have time. I don't have time to figure that out right now. I'd rather spend the time making these videos. So also, I wanted to give a shout out real quick. How do I find this? Yeah, let me do this. There was a guy who was kind enough to put the timestamps and the questions together for me a couple of weeks ago. It was super helpful. Let me see if I can figure out which one it is because I really want to give him a shout out. Yep, Henrik. Okay, Henrik did that for me. So check out his site. He's an up-and-coming YouTuber. He's starting to crank out some content. I forget which country he's in. Somewhere in Europe, I believe. But big shout out to Henrik for putting that together. Let's see if I can actually jump to his channel. It's too bad, guys. It seems like YouTube flagged his comment because maybe it was where he was from. I don't know, but it's unfortunate. But yeah, big shout out to him. So with that, guys, I will leave you until the next video. I'll probably give Henrik another shout out in the next Q&A and have a link to his YouTube channel because that was a pretty lousy shout out. But with that, thank you all, and I will see you in the next video. Take care.